on CNN.
I'm Jim Bolden in London. This is CNN.
It's 9 a.m. in New York, which means U.S. markets open in 30 minutes' time. I'm Maggie Lake in New York, Manisha Tank is in London, and Pauline Chu is in Hong Kong. Welcome to World Business Today.
A rebound in growth for the world's second biggest economy, but can China overcome its mounting debt problems?
As a trio of mighty U.S. companies report better than expected earnings, we'll wrap up the results from Morgan Stanley, General Electric, and Google.
And a court tells HSBC to pay a record $2.5 billion for misconduct that happened more than a decade ago.
China's economic engine is revving up. In the third quarter, it notched up its strongest performance so far this year. The world's second largest economy grew 7.8% from a year ago. And shares in Shanghai and Hong Kong rose on those growth numbers. Our emerging markets editor, John Defterios, has been crunching the numbers.
China's economic engine revved up again, but remains off the pace the world was accustomed to in the past decade. Third quarter GDP came in at a solid 7.8%, which was in line with expectations. This is what it looks like over the past year. The latest number ends a staircase of decline in the world's second largest economy. Most are giving credit to the premier, Mr. Li, for a mini stimulus plan, a combination of expanding the country's railway system and tax cuts. The real question at this juncture, what kind of growth can China deliver in 2014? A survey conducted by CNN Money suggests an expansion of 7.25% next year. While that would be the envy of most of the world, it would be well off the double-digit levels of the past decade. China's in the midst of transition, trying to engineer more domestic-led growth rather than depending on exports. Retail sales remain in the double digits, over 13%. The latest economic report comes ahead of an important Communist Party meeting next month. The relatively new government has the challenge of trying to sustain growth while curbing the rise in regional debt.
Last year, it was mostly about managing the transition. This year, it will be mostly about the economy. So we're pretty confident that they're going to get on top of some of these issues. But you're right, there are a lot of downside risks to the Chinese economy right now.
In the context of the world's largest economies, these numbers remain impressive. Europe is struggling to get back into positive territory again, and U.S. growth in the latest quarter was just a third of what we saw from China. John Defterios, CNN, Hong Kong.
Well, China's economy may be firming up, but economists say U.S. GDP took a noticeable hit from the partial government shutdown and the uncertainty over the debt ceiling. Mark Zandi of Moody's Analytics says the crisis may have shaved as much as 0.5% from this year's growth, and the toll that it took on jobs we probably won't know for some months. We do know, however, that the long-delayed September jobs report will finally be released on Tuesday, October 22nd. But the October jobs report will not be out until November 8th. That is a week later than originally scheduled. And those numbers are probably going to be messy because of that shutdown. Well, on Wall Street, the S&P 500 begins Friday's session in record territory, and futures are pointing to a higher open for stocks when trading gets underway soon. To closely watch, U.S. firms are out with earnings before the bell. Manufacturing bellwether General Electric reported better than expected profits, but net income fell 9% year over year, and sales fell 1.5%. Weakness in GE's financing arm hurt results. Meantime, banking giant Morgan Stanley swung to a third quarter profit after a year ago loss. Earnings easily beat expectations thanks to strength in equity trading. Revenue soared 50%. Ben Lichtenstein is president of TradersAudio.com, which provides news and information to traders. He joins us now live from the Chicago Mercantile Exchange, and he's going to provide some news and information to us. Ben, tell me what the sentiment's like.
Maggie.
Good morning. You know, we've sort of got the Washington fiasco behind us for the moment, but it's not resolved, and we've got a lot of earnings coming out. Where do we stand in terms of equities?
Well, we're seeing continuation of the bid session that we've been seeing, which really started out last week. If you look back, last week's low in the S&Ps was 1640. We're now 90 handles above that. that's a significant move. Right now, trading 1733 in the S&Ps, set for open bid session, trading up above daily pivots, up above yesterday's highs. We've seen continuation of the strength that we were seeing yesterday in the trend day to the upside. Chalk it up to the Google earnings, chalk it up to IBM, overnight GDP from China, whatever you want to call it, status quo type activity. The market is definitely screaming higher right now and exhibiting a lot of strength. It's telling us that it's comfortable with the most recent developments, albeit, again, just kind of kicking the can down the road in terms of this economic debacle, if you will. We fully expect to have episode 2 of this whole theatrical event that we've been seeing play out over the last couple weeks in January. But right now, again, the market's very comfortable with just status quo type activity. The dollar's come off a little bit, but really sideways for the most part. None of the major markets, aside from the S&Ps, NASDAQ, Dow, and the Russell, are really breaching any major levels of support. Right now, it's all eyes on stocks, all eyes to the upside, new year highs across the board. What more do you have to say? I mean, the market's really just telling it like it is, upside activity.
It's true. It's hard to dispute that, and I know an awful lot of people don't want to fight the tape when it's like that, and there are also people who've missed some of these big upswings, so they're just sort of looking to participate. They don't want to be left behind. Ben, what happens moving forward, though? So we've got this bid. Clearly, the path of least resistance is up for equities, but as you just mentioned, we're going to have a sequel of this whole mess in Washington in a couple of weeks. Is that a cloud that has the potential to hang over equities, or once again, is it going to be something that they look right through?
Well, there's no question. I think only time will tell. But obviously, again, with the market on its new high prints right now, the market's seeking value to the upside. So it's anyone's guess where that area of value is going to be. It'll continue to seek value higher until the perception of value is not higher anymore. Obviously, right now, again, goes without saying, perception of value is higher. So it's anyone's guess. What I like to look for at this point, and a lot of the traders behind me look for at this point, is whether we see energy, follow through, and conviction on this move. Follow through would be a byproduct, if you will, of the energy and conviction to the upside. Or are we just going to reject these levels and then retrace and find our way back down to that most recent area of value that was established right around 1680? So it all comes down to the two.
Let me jump in and ask you one question. Is this just professional, short-term people moving this around? I mean, is there a sense that the longer folks are in here now that the Washington mess is out of the way, or that retail's coming back in, some of that money that stays and sticks, or is this just short-term?
Well, what I'm actually seeing, it appears to be short covering. It's not necessarily new initiative type activity entering at these highs. I also think, keep in mind, the market can rally because of lack of a presence of sellers. And I think that's what we're seeing in some of the short covering right now. It's not so much that we're seeing a high activity or high interest in terms of real new buy-side activity, initiative buy-side activity. What we're mostly seeing is just a lack of any real conviction on behalf of the sellers. But Maggie, that's been the case all year, and look where we are. So that, again, is irrational, and it's not necessarily what we're used to seeing. It's irregular, but I wouldn't want to be fading it because that's extremely painful.
That's the problem. It doesn't feel good. We don't really trust it. But if you haven't been in it, then you missed making an awful lot of money. It's sort of a painful situation to be in. Ben, appreciate you joining us. Have a fantastic weekend. We'll talk to you again soon.
Thank you so much.
Sure.
Well, let's have a look then at how European major markets stand at the moment. And it's been a pretty similar picture for most of the session, actually. We've got the FTSE extending its gains from the morning. We're up almost 0.5% right now. The Xetra DAX up about a third. The Paris CAC 40 building on its gains as the day has gone on. L'Oreal has been a big performer there, up more than 2% this session. Reports are that it's in exclusive talks with Shiseido. Shiseido might be selling 2 of its cosmetics businesses, and it might be selling them to its bigger French rival, L'Oreal. So that's been one stock that they've been watching there. And the Zurich SMI also moving up. So we could be headed into the 7th straight positive session for European markets if they stay this way as we head into the close. Of course, the news out of China on accelerating growth really did give these markets a bump up, and the relief that there was some conclusion for the time being, at least. I don't want to use the phrase, it's been used a lot, but this kicking the can down the road thing, this very much a situation in Washington. Watch that space for more on that, but certainly a bit of relief here in Europe about that too. In other news that's coming out of Europe this session, transport in Italy, that's being disrupted today. Thousands of people have walked off the job. To protest against austerity measures set out in the government's 2014 budget, dozens of flights have been cancelled, buses and trains are delayed. Firefighters, steelworkers, civil servants and students are also joining the 24-hour strike. Pauline.
Coming up next, Manisha, on World Business Today, one of the world's biggest banks is hit with a massive fine. What will HSBC do next? So we'll take you live to London after this break.
The Energy Group, one of Africa's most diversified corporations, delivers success to investors and prosperity to growth regions in Africa. With a portfolio in key sectors from media to oil and gas in Nigeria, banking in Ghana, a luxury hotel business in Lagos and Abuja, and a respected global insurance business headquartered in Nigeria, Sao Tome and the UK. The Energy Group, building business in Africa and beyond.
Hi, I'm Mana Ivanovic. One of the favorite stops on a WTA circuit is here in Dubai Duty Free Tennis Championships. This year we are lucky enough to stay in one of the Dubai's newest hotels, the Jumeirah Creekside Hotel. Situated right in the heart of Dubai, overlooking the Dubai Creek, it is conveniently located on a site at Dubai Duty Free Tennis Stadium. It has 292 rooms, 5 fantastic restaurants, and it's really close to Dubai International Airport. One of the most interesting aspects of the hotel is the original art collection of 482 contemporary pieces. Each piece has been specially commissioned by hotel owners, Dubai Duty Free, and many have a story to tell. What a beautiful hotel! Make sure you come and check it out when you are next in Dubai. Visit Dubai or DubaiDutyFree.com.
Being located in the technological industrial development zone gives investors several benefits. Such benefits could be no VAT and custom duties on the export of the goods, subsidies on the building cost, land lease at very attractive rate, and free connection to utilities. Macedonian government has created an attractive tax package. On the other side, they are willing to help the investors in training their labor force, and they're very dedicated to remove all the administrative barriers.
Invest in Macedonia, where everything comes into place.
$2.46 billion. We're always talking about huge sums of money on this program. This time, it's because HSBC has been ordered to pay in damages interest this amount of money. The bank has been defending a class action lawsuit in the United States for 11 years, and the latest round has gone to the plaintiffs, thousands of shareholders of a company that it bought a decade ago. Well, Jim Bolden's been following the story for us. Hopefully not for a whole 11 years, maybe. Jim, okay, what's this actually about? And they're going to, I think they wish they never bought this company.
HSBC said in 2009 they wish they had never bought Household Finance. This is a subprime mortgage lender and credit card company that looked really good in 2002. We all know what happened, don't we? HSBC got into the subprime mortgage scandal, really, in the U.S. through buying Household. This predates that. So HSBC has had to wind down Household Finance, has had to stop it from loaning, says it wished it never had bought it, and now still is going through the courts and saying that it wants to appeal this because it doesn't think it should have to pay this amount of money. But it all happened before HSBC even bought it. So it's been a disaster for this global bank. But everybody tried to pile into the U.S. to get into this while at the groundswell. And, of course, everybody's paying the price. Now, this money is to go to individuals who said that what happened under Household was wrong. The judge has agreed. The jury has agreed. The judge says it's time to pay up. But HSBC will appeal.
Okay. 2 words come to mind. Due diligence. We could discuss that another day. There's another very interesting story that's emerged today in London about the Bank of England getting on Twitter. This is unprecedented.
Yeah, this is one of the members, Spencer Dales, spent an hour on Twitter and had a hashtag called AskBOE. In other words, he was going to answer questions from the public. I have to say most of the questions came from investment managers, journalists, and others who really understand how the Bank of England works. But it was a very interesting hour because it just happened to be that a comment he made yesterday made it sound like he thinks the Bank of England would raise interest rates next year. He was able to use Twitter to say, no,
I don't think it's going to be next year. But it was a lot of fun to look at because there were a lot of people asking some very serious questions. I'm not saying he could answer, like, when will interest rates rise? He couldn't say, don't buy a mortgage. You know, he wouldn't do that. But the bank was taking that step that they've been taking under Mark Carney, the new chief, the head of the bank, who's come from Canada, who's trying to have more and more transparency, and just thought, let's have people ask questions to the Bank of England for an hour. It's novel, but not for companies. Companies have been doing that for many years. But for a bank to do it, like a central bank, it was a novel idea.
But in a sense, what is not novel about it is the management of expectations to some extent. You know, OK, it's Spencer Dale. We're talking about the chief economist here. We're not talking about the chairman of the bank or anything. But, you know, Ben Bernanke has been very particular about being a little bit more open, as it were, and managing these expectations. And I guess there is that group that says that creates a much better flow. It creates a lot more stability.
And it's all about forward guidance. This is the term that we all learned about this year. The Bank of England's doing it now under Mark Carney. He started under the Bank of Canada. We've seen it with the Fed. We even see it a little bit with ECB, with Mr. Draghi. The idea is, everything used to be under, when Greenspan was the head of the U.S. Federal Reserve, we called it Greenspeak. We used to go to the hearings. I did that in Washington, and you'd listen for hours trying to parse what he's trying to say. And it was Greenspeak. It was amazing. It was economists talking to economists with journalists trying to interpret. It was a disaster. It just didn't work. So these guys have all come out and said, we need to explain directly to people what it is we think we're doing, why we're doing it. And the Bank of England has said, we will not look at raising interest rates till unemployment hits 7%. The thought that maybe that was changing has gone away now because they used Twitter to explain, you know, Spencer, to explain what he meant by that. And he doesn't think 2014. A lot of people think 2015.
Thankfully, you don't do Greenspeak. And we've learned two things: due diligence and communicate more. Jim,
and
thank
forward
you.
Guidance.
Forward guidance. Maggie, it's all yours.
You know, it's amazing. I'm sure you guys sympathize. Trying to understand central bankers and translate it in TV is hard enough. To tweet it out in 140 characters, Spencer, mad skills. He's got the kudos of the day. But it is all about being on social media, being online, and communicating, which brings us to our next story. Facebook has stopped treating teenage users differently from adults in one very special way. It now lets teens choose to post updates that can be seen by the general public, including strangers and even companies. Until now, Facebook felt that option shouldn't be available for users under 18 years old. That change took effect immediately this week. And for more on the sort of online privacy issues this brings up, we've got Jules Polonetsky joining us live from Washington. He's the executive director and co-chair of the Future of Privacy Forum. Jules, great to have you today. I've got to tell you, as soon as that news went out, it sparked so much conversation, so many sort of visceral feelings from a lot of people. And I think the issue is, in a world where we're living, where there are headlines almost every day about the bullying that's going online, you know, we have a very prominent murder case playing out here in the U.S. Headlines. It sort of unnerved a lot of people, whether this should be happening, whether they should be doing it. Talk to us about this, what this means in terms of privacy, and how Facebook may be responding to this. Should 13-year-old to 17-year-old posts be public?
Well, I think there's been a lot of confusion about this because, you know, the bullying issue clearly is one that we're all deeply concerned about. Most of this bullying happens in loops of friends, friends of friends. Most of the folks that are doing bullying don't want it out there where a parent can see it, where a school administrator can see it. So I don't see this being something that's going to, you know, create additional bullying challenges. I think where we do need to think about it is, are teens ready to make smart decisions about posting things publicly that anybody can see? And I think the reality is they're doing it on Twitter and they're doing it on Google+. And so I think Facebook took a look at the fact that they were restricting what a 17-year-old who maybe wants to, you know, protest against his government or complain about a movie. Those teens were moving to Twitter to have those conversations. The second thing that Facebook did, I think that's really interesting, is, you know, we know that defaults rule. Most people don't change defaults. Facebook changed the default setting so that from now on, a teen who creates a new account is only sharing with friends. That's new. The old setting was friends of friends, and, you know, that's thousands of people.
You know, Jules, you bring up a really interesting point. And when you say, you know, 17-year-olds who want to protest, you know, we certainly know you're almost able to vote in the U.S. A lot of young people are disengaging from the political system. Abroad, you have many of the people participating in a lot of these protests are young people. They're unemployed. They want their voice heard. I totally understand that. 13-year-olds mean a very different thing to me, especially as a parent and as an aunt. You know, it's hard to sort of monitor that. Should we expect Facebook to be responsible for that? Do they ultimately have to be because they're providing the platform? Or is this an area where we're going to see the government increasingly put their hand in?
Well, the government has jumped in already. You know, here in Washington, Congress has shown that, you know, it has challenges in solving the budget, let alone, you know, doing really nuanced legislation. But the states don't wait. So California has just passed a law giving parents the right to delete. And so if your minor posts on Facebook or, frankly, on any other site, those companies now must give you the right to take down that information. You know, the key really is 13, 14, 15, they are out there. It's really hard to put that genie back in the box. They're doing it on Google+, they're doing it on Twitter, and now they'll be doing it on Facebook. Are we in a position to say to them, listen, think twice. Is this something, you know, are you looking to put yourself on the record, or is this something? Now, Facebook is putting a little speed bump. The first couple of times before a teen posts, they're going to say, hey, this is public. You know, are you sure you want to post it?
Right.
But frankly, parents need to be part of that conversation as well.
And that, I think that's the takeaway, isn't it? It's a kind of collective effort from parents, from the community, from schools, from the companies who do bear a burden here, I think, to try to come up with some formula in an area that's changing so quickly. And frankly, we're playing catch up to the young kids. Jules, we're going to continue to talk about this subject, but we've got to end there for today. Jules Polensky. And we want our viewers to join in at Maggie Lake, at CNN, WBT. How do you feel about teens being allowed to communicate like this? Pauline, I know especially for us parents and Manisha, it's sort of nerve-wracking to watch this happen. A lot of people feel very strongly about this.
Yeah, we're all parents here, and when I heard about that, I got very nervous. I mean, I have very young kids, so they don't have Facebook pages yet. But when you're talking about that age range from 13 to 17, there's so much impulsiveness that I'm not so sure the average 13-year-old would have the good sense to make a smart decision. So that makes me very, very nervous. Well, coming up next after the break, devastation in Australia as bushfires ravage parts of New South Wales. We'll tell you about the damage there and what firefighters are up against.
Ladies and gentlemen, welcome to the land of FC Barcelona, where the weather is beautiful and so is the game. The weather was brought to you by Qatar Airways, proud partner of FC Barcelona.
Fire season in Australia is getting off to an early and frightening start. Nearly 100 bushfires are burning in the state of New South Wales. Many homes have already been lost.
Spot firing and all around the house, you know. And that's, you know, just unbelievable. We're in inches of the house.
Going on 17 years and all our dreams, and it's just gone down, just gone up in flames. Just there's no words to express. I don't know what to say. I'm lost. I'm confused.
You just have to look at their expressions there and how tired they are. Well, Mari Ramos is live at the International Weather Center with more details, and this obviously looks so very serious, Mari.
It is, and especially serious because it's close to these more populated areas there near Sydney, and that's a big concern. One of our reporters was saying yesterday that it was very eerie to see the fires so close to the city and that eerie glow in the sky that they had yesterday. Let's talk about the weather very quickly. I want to go ahead and give you an update. The winds not as strong today as they were yesterday or as they were the day before, but that is going to change as we head into the latter part of the weekend. The temperature is not as warm now either, but that is also going to change as we head into the weekend. So this is going to be an uphill battle. This is only the beginning of the fire season for this part of the world. So in the forecast, what we have is Saturday, temperature still closer to the average, around 23 degrees Celsius, staying dry. That's the big thing. And notice by Sunday and into Monday, those temperatures go quickly very, very high up. And that's a concern. The other thing is those shifting wind patterns that are going to happen. We had one front that came through, and that's what brought that easing of the winds that we have today and let firefighters get a handle on the situation. But another cold front is coming along, and as that approaches, the winds are going to increase again out of the north, hot, dry winds, and that will help increase the risk of fires across those areas. So it's a very huge concern. It's a large area that is at risk as well, not just that area in New South Wales. So there's one front going away, there's the break in between, and here comes the next cold front. So a lot going on still here. I want to talk a little bit about firefighting and the cost of all of this. Overall, in the world, the cost of wildfires is set to rise because wildfires, Pauline, could become more common and more frequent as the climate warms. They're usually accompanied by droughts. They're accompanied by hot periods of heat waves, for example. And the way that we're seeing our population grow and buildings and more homes are getting closer and closer to these forests, that increases the risk. And the property values, these are usually very expensive homes. That adds to the losses that we tend to see. And then the insurance coverage is going to vary depending on where people are located. And you end up with millions of people affected sometimes as that smoke travels hundreds and hundreds of kilometers at a time. And it could really be a huge, huge concern. So it's not an Australia problem alone. This is something that we all need to kind of look at. Back to you.
Yeah, absolutely. And when you take all those factors together, the bill absolutely adds up. Mari, thank you very much. Mari Ramos there. Maggie.
We are moments away from the start of a new session on Wall Street. We will bring you the opening bell when we return. Stay with us.
To see a new world, we try. To see a new world, we explore. To see a new world, we don't give up. We try and try. Maybe it's because we want to see a new world. Let's try together, and let's go see a new world.
Lady-Matic presents Leading Women.
You can call her a supercommuter. From Taiwan to Tokyo to California, all in just 7 days. A typical week for Eva Chen, as CEO of tech company Trend Micro.
Trend Micro is a global company. We always say we are a security company, and cyber criminals are global, so cyber policeman has to be global.
Trend Micro is the third largest online security software company in the world. A leader in cloud security, they say their goal is to protect user data and create a safe place for digital sharing. When it comes to running her company and her life, Chen takes a bold approach.
We are in the knowledge economy, right? The knowledge will create most of the value for our customers.
Here in the dark, I feel I sense my skin in between the waves. I am human, I am criminal, but I feel life here in my heart again.
The Taliban tried to kill her for going to school. They only made her stronger.
Her name is Malala, and she talks to CNN's Christiane Amanpour.
You still have huge dreams. They didn't take that away from you.
Hear her story, her vision for the future, and why she'll never stop.
They only can shoot a body, but they cannot shoot my dreams.
The Bravest Girl in the World with Christiane Amanpour. Tonight only on CNN. CNN original series Anthony Bourdain Parts Unknown, Sicily.
Octopus. Cuttlefish. Pancetta. Leonata. Oh, that looks good. This juice. How do you say it in Italian? Swordfish. Looks like hell. Tastes like heaven. Smells good in here. Chin. Caponata. That's old school. That's Sicily right there.
Anthony Bourdain Parts Unknown, Sicily. Only on CNN.
I'm Vladimir Dutin in Lagos, Nigeria. This is CNN.
Opening bell at the NASDAQ and the New York Stock Exchange. It's Friday, and it feels like it. Looks like we're going to have a little bit of a rally. We just had Ben telling us from Chicago earlier that it looks like it's all buying for stocks. Better than expected earnings, although we have a negative print right at the open. We'll see so how much we know. But we have a better than expected earnings. We have better than expected GDP coming from China. That all helping. But we've come a long way. So whether we're going to see a little bit of profit taking, a little bit of jockeying, or whether in fact the bulls can continue to inch this thing higher remains to be seen. But there's a lot of support for stocks. So it doesn't look like we're going to see any kind of big drop. But can we rally higher? That seems to be the issue. Manisha, how's it looking where you are?
Yeah, well, we're in positive territory, Maggie. If people are keeping their eye on the US Open right now, they're going to be wondering whether that flat open, in fact, as you saw, as you were just telling us, opening slightly lower, whether that's going to persist or not. I thought it was interesting what Ben was saying earlier about there being a lack of sellers. Maybe that's why we're seeing these stronger numbers. But otherwise, yeah, European markets have been positive. Among some of the stocks we've watched today, L'Oreal was one that I mentioned earlier. Another is Anglo-American. We had a mixed production report from them. What was interesting was copper and diamonds and nickel all up. Iron ore down somewhat, which is interesting because we also have those China growth numbers today, which were did improve the mood here in Europe so far as the markets go. But, of course, those tie in very, very well with these mineral numbers as well. So just trying to pull together all of that information, really, and we've had a pretty muted session here. What about you, Pauline?
Yeah, Manisha, I was just going to say, I suspected the higher resource stocks prices that you're seeing is related to the GDP number that we saw out of China today. And that means that third quarter GDP was up after two slowing quarters, up 7.8% from a year ago. And as a result, we saw the markets here rally in the Asia Pacific region, except the Nikkei was down, actually. But there was also relief from Washington after we struck that temporary debt deal there. We did see a stronger yen hurt Japanese exporters' shares as a result of what was happening with the dollar. So, of course, a stronger yen hurting exporters there. Manisha.
Yeah, Pauline, we're going to stick with the business news agenda in just a moment, but get a quick roundup on some of the top world news stories that we're following here on CNN. A senior military police commander has reportedly been killed in Libya. The country's official news agency says Colonel Ahmed al-Barghati was shot dead by unidentified gunmen in Benghazi. Al-Barghati was the director of military police in the Libyan army. A Norwegian citizen of Somali descent is being investigated as a possible suspect in last month's deadly attack at the Westgate Mall in Nairobi. Norwegian and Kenyan counterterrorism officers believe he may have ties to one of the most dangerous commanders in the Somali militant group Al-Shabaab. At least 67 people were killed in the siege in the Kenyan capital. Edward Snowden says there's a 0% chance Russia or China got their hands on classified documents. The U.S. intelligence leaker told the New York Times he gave all his classified documents to the media before he left Hong Kong. Snowden is currently in Russia, where he's been given temporary asylum. And a member of the Russian punk band Pussy Riot has dropped her appeal for an early release from prison. Maria Alokina says she's doing it in a show of solidarity for her bandmate, Nadezhda Tolokonina. Tolokonnikova, who's also in jail and on hunger strike over prison conditions. Both were sentenced to 2 years for a protest against President Vladimir Putin at Moscow's main cathedral in 2012. Pauline.
Well, Manisha, there's an interesting story out of Germany today. The Vatican is investigating whether one of its own indulged in lavish spending. At the center of the controversy is this house in Germany that cost $42 million. It's the residence of a Roman Catholic bishop, and it's sparking calls for his resignation. Diana Magne has more.
Here you have, if you will, the two faces of today's Catholic Church, the old and the new. Pope Francis, with his message of humility and change, declaring from his modest quarters in the Santa Marta guest house that priests should not live like princes. And German Bishop Franz Peter Thebarts van Elst, theologically conservative, and also, it seems, a believer in the finer things in life, having just renovated his episcopal residence in the German town of Limburg to the tune of $42 million. Though it's no eyesore, Limburg residents aren't pleased with a project that's run drastically over budget.
As a Catholic, it is something that completely doesn't fit with the times today. Such a prestige project that the Church pushes through.
He built his office on lies. This must come to an end. The diocese does not deserve this.
Many within and beyond Limburg are calling on the bishop to resign. But Thebarts van Elst insists the cost overruns were legitimate and came from the renovation of protected features, such as the old city wall. He says his fate lies in the hands of the Holy Father. Archbishop Robert Zollitsch, who heads Germany's Catholic Church, met with Pope Francis on Thursday. He says a commission set up to investigate the bishop's spending will start its work immediately, and that he's, quote, confident after his meeting that all sides are interested in a good and speedy resolution. Perhaps an indication that Pope Francis is prepared to wait on the Commission's results before he responds to a scandal whose momentum is overshadowing his reform efforts. The German press has come down hard on Bishop Thebarts van Elst, Der Spiegel especially criticizing him for a first-class flight he took to India to visit social services for the poor. He says that he was upgraded and that he doesn't like champagne and caviar in any case. But it seems that he is now going for a cheaper option, according to media reports, flying to Rome on a budget airline, where he awaits word on his future. Diana Magne, CNN, Berlin.
Still to come on World Business Today, investors respond to Google's impressive quarterly earnings report. We'll go live to the NASDAQ to get the very latest on the search engine's share price.
40 years of progress, partnership and innovation. Patents help inventors bring new technologies to market, creating prosperity and jobs. Patents secure value through investment and licensing. Patents reveal the state-of-the-art, with millions of technical solutions free to access through our databases. Innovators strive for a better world. The European Patent Office supports them.
Welcome to the world's 9th largest country, seated in the heart of the Eurasian continent. To the country that has access to a potential market of 500 million people. To Central Asia's strongest economy with the most attractive tax climate in the Commonwealth of Independent States and Eastern Europe. Make use of the state program of accelerated industrialization that made us number 10 in the World Investor Protection List. Join those who are already enjoying this. Discover, explore, invest in Kazakhstan.
Thinking of banking in Africa? Think Zenith. Zenith Bank PLC is one of the biggest banks in Africa, with about 1 million shareholders and over 300 business offices in Nigeria and subsidiaries in other African countries and the United Kingdom. Committed to the best possible customer experience. Zenith Bank, in your best interest.
once in flight, Korean Air.
Just want to bring you up to date on U.S. stocks. We saw the big board down slightly. Blue chips are under a little bit of pressure, but look what's happening on the S&P 500, and this is the broadest measure of U.S. stocks. This is very much in line with the sentiment we were hearing from Ben, and this is the index he really watches and trades on. This opened actually at an intraday high. That is showing gains, and the NASDAQ is rallying as well. So some of the good earnings filtering through to the broader index. Blue chips, however, you're specifically held down by some of their own issues. So important to make that distinction. Pauline?
Well, Maggie, another New York City landmark is being sold to a Chinese investor. J.P. Morgan Chase has sold One Chase Manhattan Plaza in Lower Manhattan to a Shanghai-based conglomerate, Fosun International, for $725 million. This is the latest in Chinese purchases of major properties in the Big Apple. Shanghai's Greenland Group became majority owners in the development of Brooklyn's Atlantic Yards, which will be a huge residential and commercial space. Now, this summer, the iconic General Motors building on Fifth Avenue, where the flagship Apple store is, was purchased by the family of Chinese real estate mogul Zhang Xin and Brazil's Safra banking family. So, Maggie, I'm sure you recognize these buildings, and it's probably not the last of a landmark building that will be sold to a Chinese investor.
Yeah, it's where the money is, and commercial real estate has been moving hands here in New York. So that's a sign of the times, isn't it, Pauline? Let's talk about another sign of the times, a whole bunch of them. We are in the thick of corporate earnings season. It's in full swing right now. Big hitters Morgan Stanley and General Electric put out their latest figures before the bell this morning. Allison Kostak is standing by at the New York Stock Exchange. And Allison, interesting, we're seeing some of the other parts of the stock market rally, the Dow lagging a little bit. What's going on?
Yeah, and then you look at earnings season itself so far, you know, you wouldn't know it, but earnings have been coming out for weeks, but they haven't really wound up moving the broader market so much because of the debt ceiling battle. That's really been the focus. Well, now Wall Street is moving past that, and today is the first day we're seeing a lot more attention being paid to corporate results. First of all, Morgan Stanley seems to be the new winner on Wall Street as far as the banks reporting this season. J.P. Morgan, Goldman Sachs, they missed the mark, but Morgan Stanley's revenue is up 50% to almost $8 billion. It also swung to a $900 million profit, reversing a $1 billion loss last year. Both of those numbers beating estimates. Now, Morgan is undergoing some big changes. It's trying to grow its wealth management business and rely less on trading because the bond trading business has really been more volatile rather, and less reliable. Seems to be a formula that's working for Morgan Stanley. Shares right now are up 1.75%, and shares are up more than 50% for the year. General Electric, we're also keeping our eye on that company, posting its earnings as well. For GE, it's slow and steady. Its earnings slipped a little bit, but it was largely because of restructuring expenses. Its profits still beat expectations. Also, GE's industrial business, that's still doing well. We are seeing shares of General Electric move higher, more than 2.5%. So you combine that with solid earnings from Google and the S&P 500 opening at a record high, Maggie, and you've got yourself an interesting day on this Friday for the stock market.
You certainly do. Allison, I'm just curious, are they sort of, I'm so sick of talking about Washington, don't want to see them, don't want to think about it, but we know that we're going to be facing it in a couple weeks. Is there a sense at all that that's sort of hanging over the market, or are they just sort of taking a break and focusing back on the fundamentals?
I think it's the latter of what you said. I think you're seeing the market really just kind of take a break from all the talk going on in Washington. At least, hey, they know what to expect. They expect another battle to happen as we get closer to January. I think now you're seeing the focus on earnings. You're also seeing the focus turn back to the Fed stimulus, and there's a sort of a growing thought that there's less of a likelihood that you're going to see any tapering going on in October, and even questionable if you'll see a tapering at the Fed's meeting in December because of the hit that the U.S. economy took because of the shutdown, because of the whole debate over the debt ceiling. Maggie?
All right, Allison. Yeah, it's all about the Fed. That foot on the gas, that easy money has a lot to do with what's going on here. Absolutely. Allison, great to see you. Yes. Thanks so much. Manisha?
Hey, Maggie. Don't lie. You love all that stuff happening at Washington, really. Taking it uptown now, let's talk about Google. It impresses with its quarterly earnings. The market certainly responding with a solid boost to the company's stock price. Speaking of uptown, go to the NASDAQ market site. Maribel Aber is standing by. So how's it looking?
Hi, Manisha. Well, Google shares hit new heights again after the company's latest earnings report. Google easily topped its all-time high of 928 in after-hours trading. Let's check it out today. It's up big time here, up 10.3% at 980 now. Okay, the company reported sales and profit that top Wall Street expectations. Sales from Google-owned sites and its network of partner sites both jumped by almost a quarter over the year. Search made up about 92% of Google's business, and overall, Google's sales jumped to almost $15 billion last quarter. That was a 12% gain over last year. The company earned $10.74 per share. Both figures beat estimates from analysts. The one weak spot, though, for Google is in revenue from mobile. Mobile internet usage continues to grow, but advertisers, they won't pay as much for mobile ads as they will for desktop ones. So Google's number of ads clicked rose, but Manisha, here's the problem. It's getting less money on average for each of those clicks. The number of paid clicks rose 26% over last year, but the average amount paid per click fell by 8%. Manisha.
That's what people are going to watch very closely from here on out. Maribel, thank you so much for that.
Well, still to come right here on World Business Today, everyone's talking about kicking the can down the road. So our Richard Quest gets in on the act as well.
I'm tired of your lines, sick of your lies. This love is done for good. I'm gone. I'm moving to the other side.
What's up, it's a little. I'm moving to the other side, it's a little. We grew back home, it's a little. With the network clear like Elton. We grew back home like gentle. Network with just stay gentle. Oh, yeah, let's go. I done the fuck.
Move to greener pastures. Glow Unlimited.
It's a new dawn in Africa, and our enormous potential and opportunities are being harnessed by one bank. UBA, United Bank for Africa, stands strong as the bank of choice for Africans and Africa-related businesses, uniting African people and businesses with the world. So, make the wise choice today. Bank with UBA, Africa's global bank.
We are looking at the Dow. As you can see, down just fractionally, a little bit flat there, but the S&P and NASDAQ have been faring better today on the back of some better than expected earnings. Remember, those expectations in some cases were pretty low. Now, let's talk about something that we can't stop talking about, kicking the can. It's a phrase you've probably heard more times than you care to remember in the past couple of days. We've already said it a couple times on this show. It has to do with Washington's habit of postponing big decisions rather than resolving issues right away, in case you hadn't figured that out yet. Richard Quest has been kicking his own can, and he joins us now from New York. Richard, we saw a little promo there. I know why you were a journalist, because you weren't getting signed to any football teams, that's for sure.
How charitable you are at the end of the week. A long week in which, of course, there's only one thing that people have been talking about: how you kick this as far and as fast as you can. This latest series of can kicking began in the summer of 2011. When Congress raised the debt ceiling, the US lost its AAA, and a super committee was formed to sort out the budget problems. The can was kicked. In November of that year, the super committee failed to reach an agreement. Threw the decision back to Congress, who, not surprisingly, kicked the can. Fast forward, and the fiscal cliff crisis is upon us. Congress still couldn't agree. Sequestration came in, and as for the deficit, and debt ceiling down the road. And so we come to the budget crisis of the past few days, where the US came as close to default as it ever wants to. The debt ceiling was finally raised. The US government was reopened, but of course it was only done by kicking the can into next year. So now there's another 4 months to try and reach a long-lasting budget agreement. All involved would do well to remember an important economic fact. There comes a time when there's no longer any road to kick the can down. And that's the problem. Run out of road. Well, we're not quite there yet, Maggie. The can's still got some way to be kicked. The US economy is still the largest economy in the world, and it has a huge amount of potential for pain. But let there be no doubt, there will come a time when the can reaches the end.
And a lot of people certainly hoping, the folks we talked to, Richard, on Wall Street, certainly hoping that they get down to business and maybe this marks the beginning of a change. But I'm skeptical about that. I know a lot of other people are as well. Richard, so great to see you on this end of the day. Thanks so much. Manisha?
Thank you.
Where's my can? I want my can. I want to be able to kick cans around as well. While somebody finds it, I'll update you on what's happening on European stock markets right now. The China numbers, the acceleration in growth there, really gave the benchmarks here in Europe a bit of a boost at the open. We were up about 1/3% when the FTSE 100 opened, but we've extended those gains as the day has gone on, up around 0.5% right now. The Xetra DAX also gaining, along with the Paris CAC 40 and the Zurich SMI. We've also had a couple of stocks that have been worth watching. L'Oreal was one of them that was moving higher in France. Anglo-American on the FTSE. That was after a bit of a mixed production report. Iron ore production down, nickel, diamond and copper up. Obviously, those numbers tie in quite closely with what's happening in terms of Chinese growth as well. Maybe Pauline took the can. I don't know, Pauline.
Yeah, you know, I think that can that Richard was kicking was the same can that he used 2 years ago when he was describing that. So we need to recycle that can. Well, Asian shares ended the week mostly in the green, except for the Tokyo Nikkei. Now, there was relief over that debt deal in Washington, but the big market mover today was that GDP data that Manisha mentioned out of China. Investors welcomed the third quarter figures. It showed that gross domestic product was up 7.8% in the third quarter after 2 straight quarters of slowing growth, and this is now in line with the government's plan for stability as they shoot for 7.5% in growth for this year. But the Nikkei was down by almost 0.2% off of a stronger yen, which affected exporters there. Maggie.
Now, if you thought fantasy sport was as close as you could get to the action, think again. A new company is offering fans the chance to invest in their favorite athletes and reap the benefits of future earnings. CNN's chief business correspondent Christine Romans joins us here in New York. And Christine, I know a lot of people are thinking it's fantasy football, which at least is really big here in the U.S. We're talking about American football. But this is actually something different, isn't it?
It really is. It's literally buying stock in a jock. I mean, if you're a sports fan, you want to get, you want to invest in your favorite player. This could be you. The brand building company Fantex Holdings has just filed with regulators to offer a new tracking stock. A tracking stock, the Arian Foster convertible. Arian Foster is a person. This is the Pro Bowl running back, plays for the Houston Texans. He's the first athlete to sign on to this. Stock in an athlete. How does that work? Here's the math, Maggie. Foster gets a lump sum payment of $10 million. The investor then gets 20% of future income derived from the league contracts, endorsements, appearance fees. So you're investing in the future earnings of this player. The stock price is tied to the player's brand. It'll be up to Fantex to help build that brand, but you know it's off to a pretty good start in terms of the brand. Foster has led all running backs in rushing touchdowns in 2 of the past 3 seasons. Now, some people are like, wow, this sounds crazy, you know, buying stock in a sport. But remember the late 1990s, the Bowie bonds. Remember those? They paid interest on revenue from a collection of 25 albums by David Bowie, you know, the rock legend. But this is a little different. You know, football, it's a contact sport. Their injuries could derail a player's potential. That could certainly block a lucrative future in brand building. Assuming the risk is part of the game for investors, of course, interested in buying into an athlete. For the player, it can be viewed as a way to diversify and get some big money up front. So interesting to see this go to the sports world. Fantech's hoping to develop the business by signing additional players in football and other sports. It's even got its sights on pop singers, Hollywood actors. It's a whole new frontier, but will it be anything other than a novelty? I think that, you know, the Bowie bonds, things like this we've seen before have been mostly a novelty, not seen as a serious investment.
And Christine, it's so funny that you and I spend all our time trying to tell people you have to take the emotion out of investing. You have to, this exactly feeds on that. You're like, oh, I like them, I'm going to buy the stock. I mean, just because you like their songs means in no way means this is going to be a good return on your cash, is it?
You know, it isn't. And, you know, but we also always tell people, buy what you know, right?
Yes,
you know, don't invest in things you don't know. And I have, you know, friends / my husband who really knows a lot about sports.
Yes, that's
true. So maybe,
true.
I don't know, maybe it is a good thing to invest in.
That's true. Okay, so we're going to have to follow this. And what will be interesting, next time we talk, you can tell me who you would invest in that whole group. And I'll do some homework and see who I can come up with.
Can you
And
do
challenge
Fed chiefs and finance ministers? Can we do that?
Oh, yeah, no. Can you imagine? This is why we are who we are. It's a sad statement, isn't it? Excellent. Christine, thank you so much. And we challenge all the viewers to do the same. Who do you think is a good investment? Who's the sports guy or a pop singer that you think would make it fascinating, isn't it, Manisha?
Oh, yeah. I love your idea. Let's check out policymakers and those that we think would be a good investment or not. I'm on the side of that. I think you ladies have a great idea there. But there are actually parents who would probably bet on the success of their kids. Could you imagine? Would you actually put money on it, Maggie? Maybe you, Pauline? We're all parents here. For one man, betting that his grandson would one day play football for his country was a no-brainer. Jim Bolden has the story.
On Tuesday night, 16-year-old Harry Wilson came on for Wales with a few minutes to go in its World Cup qualifier in Belgium. And back in Wales, his proud grandfather became a lot richer.
I honestly didn't expect it for a few years yet.
Peter Edwards always hoped grandson Harry would play for Wales, but thought maybe it would take a few more years. Though he saw something special when Harry was a toddler.
He was crawling after the ball in the living room, so I just thought it would be a bad idea to put a bet on him one day he might play for Wales.
Proud granddad went to a local betting shop and put down £50, around $80 today. A wager that his grandson would play football for Wales. So bookmaker William Hill took the bet.
And they offered me odds of 2,500 to 1, so I thought I'd better take it.
Granddad Peter waited and kept working as an electrician. But now with his grandson taking the field for Wales, he collects £125,000, around $200,000 on that bet. And 62-year-old granddad Peter is retiring a year early, just as 16-year-old Harry's international career takes off. Jim Bolden, CNN, London.
That's a great story. That's an investment in faith that really paid off. And that is all from the team right here at WBT. Thanks for joining us. Have a great weekend.
அடிக்கடி கரண்ட் ஆஃப் ஆறதுனால நான் கடையை மூடிடலான்னு இருந்தேன். ஆனா இன்னைக்கு பிசினஸ் எக்ஸ்பேன்ஷன் பண்ணலாம்னு முடிவு பண்ணிருக்கேன்.
Ardhi hii ilikuwa tasa. Hakuna maji, hakuna chakula. Kisha siku moja maisha yetu ilibadilika.
People ask how I keep smiling in such a critical place. I say thanks to Kirloskar.
கிர்லோஸ்கருக்கு நன்றி. அது என் வாழ்க்கையை மாத்திடுச்சு.
Kilota ilibadilisha hatima yetu.
I'm a Golf Citizen.
I am a Golf Citizen.
Golf Citizen is an online golf booking platform that lets you book in real time with no extra fees. With instant confirmation, you spend less time planning and more time playing.
I'm a Golf Citizen. Are you?
GolfCitizen.com. Search, book, play.
Every country has an identity, a history, customs, culture. A unique landscape that determines how its people live, work, and play. Now get an insider's look with CNN's On the Road. Next week, explore Myanmar.
See how this once reclusive country is opening its doors, its sacred sites, finally revealing its treasures.
On the Road, Myanmar, all next week on CNN.
The Taliban tried to kill her for going to school. They only made her stronger. Her name is Malala, and she talks to CNN's Christiane Amanpour.
You still have huge dreams. They didn't take that away from you.
Hear her story, her vision for the